the dollar would collapse, the stock market would collapse, the bond market would collapse, banking system would collapse, the insurance companies would collapse, everything. This is the Great Reset. Little by little by little, I call it logarithmic decay. Little by little by little by little, it starts to chip away as those dollars are there's no longer a necessity to hold them. And as those dollars start to come home, inflation rates would go higher and higher and higher and higher. But when the world catches on that this is a trend in motion that isn't going to stop and will only get faster, that's when things get very interesting. And if we were to see an outright dumping globally, like an Operation Sandman, as Mike Adams talks about, it would be chaotic because the natural reaction of the dollar creating hyperinflation being dumped across the globe, hitting our shores in a tsunami of inflation, would be a massive spike in interest rates. And the over-leveraging of the banks in particular is a real big problem here. When they say it's time and they flip the switch, I think the West will have a hard time to push back against it because you will be talking the majority of human population, a larger military might, a larger portion of GDP, and the majority of the world's commodities. I think they realize that if they're going to do this, they need to be methodical about it and have all their ducks in a row. The question is, how fast does it accelerate? And that's anyone's guess.
On the Spot with Michelle Makori is brought to you by Swan Bitcoin.
Hello, I'm Michelle Makori. Thank you for joining us. In a major shift, Saudi Arabia has let the Petrodollar agreement expire, opting to sell oil in multiple currencies instead of exclusively using the US dollar. The agreement of the past 50 years expired on June 9th. Now, the so-called Petrodollar deal reportedly stipulated that Saudi Arabia would price its oil exports exclusively in US dollars and invest its surplus oil revenues in US Treasury bonds. In exchange, the US would provide military support and protection to the kingdom. This helped the US dollar cement its position as the world's reserve currency and ushered in an era of American prosperity. So Saudi Arabia, now looking to move beyond an exclusive relationship with the US, marks a significant change in global economic dynamics and could have far-reaching implications for the US dollar's dominance. Meanwhile, Saudi Arabia's central bank has also joined a trial for a China-led central bank digital currency cross-border payment system known as Project Embridge. And this could be another step towards less of the world's oil being traded in US dollars. And this all happens as the de-dollarization trend continues, with the BRICS Plus Ministers of Foreign Affairs recently meeting in Russia. Members reiterated calls to ditch the dollar and use their own currencies in trade and financial transactions. And it's arguably the weaponization of the dollar after Russia's invasion of Ukraine that has accelerated the trend to de-dollarize. And as the BRICS members were meeting in Russia, in Italy, leaders of the G7 were also meeting, and they agreed to issue $50 billion in loans for Ukraine that are backed by the profits of frozen Russian sovereign assets. Now, ahead of the summit, the United States decided to expand sanctions on Russia and China. These new measures target Chinese companies that support Russia's efforts in Ukraine and aim to deter foreign financial institutions from dealing with sanctioned Russian entities. Now, this caused an immediate suspension of trading in dollars and euros on Russia's leading financial marketplace, the Moscow Exchange. And Russia has also now officially adopted the Chinese yuan as its primary foreign currency. And this all comes as China has been dumping its dollar assets. Beijing sold a record $53.3 billion worth of US treasuries and agency bonds in the first quarter and has been piling into gold. The precious metal now makes up almost 5% of Chinese reserves, the highest since at least 2015. Now, not only are central banks buying gold at record levels, but they're also reducing their share of US dollar reserves. According to the IMF, dollar reserves held by central banks fell to 58.4% during the fourth quarter of 2023. That is the lowest level in 25 years. Well, here to discuss all of these developments and more, what this all means for the global monetary system, the fate of the dollar, and your savings and investments is Andy Schectman. Andy is the president and owner of Miles Franklin Precious Metals. He has over 3 decades of experience in the precious metals sector and is a well-regarded expert on monetary history and political economy. Andy, it is great to have you back with us here on Kitco.
Michelle, it's great to be back. Thanks for having me. I appreciate it.
Andy, it is very good to see you, but every time we connect, more of what you warned would happen in our previous interviews does indeed come to fruition. So it's always with a little bit of trepidation that we speak. Now, Andy, you have long warned that we will see a change in the dollar-denominated money order, that the dollar will lose its status as the global reserve currency and asset. And first time we spoke was January of 2023, where you warned that the trend to de-dollarize was accelerating, especially following the sanctions imposed on Russia after its invasion of Ukraine and banning Moscow from the international SWIFT system, what many called the weaponization of the dollar. Now, since then, much has happened, including the expansion of the BRICS, something that you said would happen, and member countries formalizing bilateral trade agreements, not using the dollar, but their own currencies, something you also said would happen. We've even had non-member countries like France ditching the dollar and completing natural gas deals with China paid for entirely in yuan. You also correctly called that the Saudis would join the BRICS or align with the BRICS. They do kind of have a little bit of a toe still out of the water there, straddling it a bit, but you were correct that they would align with the BRICS. And last time we spoke, you said that the Saudis joining the BRICS would be of huge significance to the petrodollar status and would accelerate de-dollarization. And it seems you have been right again on that one. Now, they've joined the BRICS. And just as a reminder to our viewers, the BRICS Plus countries produce about 44% of the world's crude oil now. Now, the Saudis, it seems, have let this 50-year-long petrodollar agreement lapse. They haven't renewed it. It doesn't look like they will. Now, this is super important because part of what keeps the dollar as the global reserve currency has been its status as the petrodollar, meaning that oil could only be purchased using dollars. So let's start off with some history, some background here, and remind our viewers how the dollar got the status of the global reserve currency in the first place. If you would be so kind as to give us just a very quick recap of Bretton Woods, then Nixon taking us off the gold standard, and then signing the petrodollar deal with the Saudi king back in 1974, and how we got you. Why don't we start off with that?
Sure. At the end of the World War II, 1944, the Allies met at Bretton Woods. The dollar replaced the pound sterling as the world reserve currency. And we told the world at that point that you take our dollars, but can always exchange them back at a fixed rate of $35 per ounce of gold. We will, in essence, back the currency by gold, making it as good as gold. And it was that way until, 1971, when several of the European leaders, in particular de Gaulle from France, realized that we were printing more money to fund the guns and butter endeavor in the Vietnam War than we had gold backing it, and called our bluff and sent warships to New York Harbor filled with dollar bills requesting a transformation into gold. And we did that so much so that over the period of about a year and a half, about half of the gold held at the Treasury was bled down. And this is what led Nixon to take the unconventional step at that point of temporarily, which never opened back up, the gold window. And at that point, our currency was completely fiat. That would be Bretton Woods 1. Bretton Woods 2 loosely would be when Kissinger, as you mentioned, 50 years ago last week, struck a deal with the Saudi kingdom that, hey, we're going to protect you, provide you munitions, but for that protection, you will, by extension of OPEC, value oil in dollars and then take the excess reserves and recycle them into U.S. treasuries. And it has been that way for, as you mentioned, 50 years. Now, if we take that at face value that this deal was not renewed, we then will follow what Zoltan Pozsar says is Bretton Woods 3, where we are right now, a system that would be identified primarily by commodities. And I would add into it transparency, a system that was predicated on opaque debt instruments and promises by a government that is borderline insolvent and viewed, as I told you way back when, in 2022, as being hypocritical. And we are viewed that way by much of the Southern Hemisphere. I think the days of that being accepted as an asset the debt promises of a country that is viewed as hypocritical, those days are coming rapidly to an end. And we see that by the massive sell-off in treasuries that we've seen over the last year or two by the countries that have been our primary creditors, China and Japan and Saudi, and all of these countries that have been holding our treasuries. Seems to be that things are changing quite a bit. And I think you can really highlight not only, as you mentioned, the weaponization of the dollar in the treasury market, but taking the unconventional, very dangerous step of confiscating, or all right, let's just call it what it is, stealing the Russian assets, whether it be stealing the interest on the accrual, which the European Union is talking about, to fund the Ukraine and the war, or the United States confiscating the $5 billion in assets we're holding to fund munitions, to give to the country that that is fighting the country we stole it from. This is a line that, once you cross it, can you come back from it? It's like a broken glass thrown against the wall. Can you put it back together before mom and dad comes home? And I don't know, Michelle, if that's even possible.
Okay, before we get into all of those issues again, I just really want to help our viewers understand the significance of oil being priced in US dollars for all this time and what it could mean if indeed this agreement is now fully done with.
Yeah, so every country on the planet's had to stockpile dollars for the last 50 years in order to buy oil. The significance of that is extraordinary, almost as extraordinary as taking the reserves, the excess, and putting it into treasuries, which is the reserve status of the dollar, the settlement status of the dollar, where every country needed to own it and stockpile it in order to buy oil, is certainly being challenged by all of these deals that are being done bilaterally, where countries will trade with one another in local currencies. And this is a huge deal. In other words, what is the incentive of countries to hold our dollars, which are being inflated away at a rate of $1 trillion in debt every single 100 days, what used to take 200 years to accumulate $1 trillion. Now we're doing it in 100 days. And a government that has chosen weaponization of the treasury and the dollar if we don't align ideologically. So the incentive of these countries who have been forced into holding dollars and stockpiling them, creating a synthetic demand, you could argue is no longer in place. Now, how fast does this unwind is the big question. But yeah, it's very, very, very significant. The reason the dollar was called the petrodollar, the reason that it had such great privilege and the hegemony, if you will, was created because everyone had to own it in order to buy oil. And oil makes the world go round. You take that away, and what is behind the dollar, it becomes truly fiat, backed by nothing whatsoever. But as Putin has recently said in a conference, the confidence of the United States economy. And I have to, add to that the confidence of the United States government. And you ask yourself, is that waning? I'll leave that up to people to decide. I'm sure we'll talk about that as this interview goes on.
Right. So, the dollar backed by the full faith of the US government. But paint a picture for us. What happens when people stop using the dollar for oil? What happens globally, and what happens to people here in the US with dollars?
Well, ultimately, it loses value. I mean, the theory really would be that as those dollars, there are way more dollars outside the U.S. than are inside the U.S. because of the stockpiling to buy oil for 50 years. And as those dollars come home and are sold back to the issuer because no one wants to hold them anymore. Now, it hasn't turned out into a full-fledged dumping, which I could see it turning into that at some point. But there still is demand for the dollar, as you mentioned, still does represent 58% of global reserves. And there is dollar-denominated debt that needs to be paid off. But little by little by little, I call it logarithmic decay. Little by little by little by little, it starts to chip away as those dollars are there's no longer a necessity to hold them. And as those dollars start to come home, inflation rates would go higher and higher and higher and higher. And heaven forbid, it's a dumping. There's something out there called Project Sandman that basically says there's a whole group of 150, 175 countries that have agreed to do just that, to dump dollars in treasuries at a predetermined time. The question is it orderly or is it chaotic? But as those dollars come home, the level of inflation rises as those currency units are added to the currency base here, which would then raise interest rates. And that's the big thing that I've always talked about, is that Powell doesn't want to raise rates, doesn't want to let the 10-year treasury get above 5% because of the over-leveraged system, in particular the banks and the broker or the insurance companies that are massively over-leveraged and undercapitalized. And as rates rise, and supposedly this magic number is at 5% on the 10-year treasury, things start to break. Now, if all of a sudden the world is no longer holding dollars and in fact forsaking and dumping them and throwing them back to the issuer, creating much, much higher inflation than the CPI would probably tell us, the market would demand a higher interest rate to compensate for that loss of purchasing power. You can't have double-digit inflation and single-digit interest rates. Your currency dies. So interest rates would rise to meet that loss in purchasing power to compensate for that. And when that happens, that's when you start to get into problems where as rates rise, things that in this country that make people feel wealthy, their stock holdings, their bond holdings, their real estate holdings, and the money held in the bank are all inversely correlated to that moment. And the over-leveraging of the banks in particular is a real big problem here. But if you think about it, if this happened all at once, if it was all at once, it would be catastrophic, as everything in this country is inversely correlated to a spike in interest rates, including the banks and the insurance companies. And when you realize that this is something that, I've been talking about for 4 years and has materialized much faster than I would have ever have dreamed. When I started talking about it, nobody was, and now everybody is. And when I think to myself, could this really happen in a fashion that would be chaotic? I think absolutely it could. Look, it starts off slow, and the players that are in the know don't want to cut off their nose to spite their face. So it starts with little by little de-dollarization, de-treasurization, replacing gold or replacing treasuries with gold, doing it slowly, methodically. But when the world catches on that this is a trend in motion that isn't going to stop and will only get faster, that's when things get very interesting. And if we were to see an outright dumping globally, like an Operation Sandman, as Mike Adams talks about, it would be chaotic because the natural reaction of the dollar creating hyperinflation being dumped across the globe, hitting our shores in a tsunami of inflation, would be a massive spike in interest rates. The dollar would collapse. The stock market would collapse. The bond market would collapse. Banking system would collapse. The insurance companies would collapse. Everything. This is the Great Reset. Could it happen? I don't know. I hope not. But I think that we will see a progression, a continued progression of de-dollarization, de-treasurization that we have seen accelerate over the last few years. It's not stopping. Question is, how fast does it accelerate? And that's anyone's guess.
Right. So even if there isn't this coordinated Operation Sandman for everybody to dump the dollars at once, even without that, this is very consequential because beyond agreeing to sell oil in dollars, part of the deal was that the Saudis agreed to invest surplus oil revenues in U.S. Treasury bonds. And that's what helped the U.S. dollar cement its position as the world's reserve currency and also ushered in an era of prosperity for Americans. They enjoyed the benefits of being the preferred market for global corporations to sell their wares to for all commodities. And the inflow of foreign capital into U.S. Treasury bonds supported low interest rates and a robust bond market. So what are the implications of that angle alone if the Saudis don't invest that surplus money back into the U.S.?
That is the angle alone. And a lot of people who push back against this thesis say, well, the BRICS don't have a bond market and the bond market is still the most liquid. And where do you put your reserves? Well, I'll tell you where you put your reserves. First and foremost, they have been putting them into gold. And if you go back 25 years, gold has doubled the performance of the bond market. It's averaged 9.9% compounding per year for the last 25 years. But what it doesn't have is counterparty risk. So when you look at all of these bilateral agreements, if we go back to the meeting in South Africa last year, that was that was the plan. That was, go back to the drawing board. We still need to talk about how we reach a common settlement currency. And I want to talk about that for a moment because James Rickards has a very interesting take on that, and I agree with it. But in the meantime, let's all trade in local currencies where, China just canceled big orders for grain from Australia and the United States, replacing it with orders from Brazil, the second largest producer or exporter of corn in the world, and a big a grain producer, and they will take yuan for the payment, not in dollars. That chips away at the dollar settlement. And then the reserves would then be put into gold instead of U.S. treasuries, which have a better track record and have no counterparty liability. But this is being seen everywhere, whether it be between Iran and China, or as you mentioned earlier, between China and the United Arab Emirates, or between Russia and India. All these countries are trading in local currencies. That chips away at the dollar settlement status. The reserve status gets chipped away when we see these countries shedding treasuries, like we've seen. China's down to just over 700 billion in treasuries from almost 3 trillion, and their gold holdings have increased, other than this month, which has remained stagnant for 19 straight months in a row. That's indicative of all of these countries in the Southern Hemisphere. They are slowly and methodically detreasurizing and accumulating gold and foreign or commodities in replacement. And I really do believe that these commodities, as Zoltan Pozsar calls Bretton Woods 3, a system backed by commodities, have become more valuable than the currencies that they're being bought with. And so the lack of treasury settlement is really the key. And I think this is the one thing that the people who, the dollar bulls and the recency bias, normalcy bias people are missing. And yes, there isn't something like the bond market yet, but I think gold represents not only, think about it, treasuries represent but a very small sliver of history in terms of other countries accepting a country's debt as an asset. But gold has a 5,000-year history of that, as do all of these commodities. There's an old saying, he who has the commodity, or the gold rather, makes the rules. And this flow of commodities, in particular gold and silver, from the west to the east is being massively underestimated. And I think that underestimation of the significance of that is a very, very big Achilles heel. This is something where these countries, I believe, are looking to commodities to replace, in particular gold, which is the only other tier 1 reserve asset, as mandated by the BIS in 2019. Look at the massive accumulation of gold by all of these Southern Hemisphere countries and the slow de-dollarization and de-treasurization. They are trading treasuries in dollars for commodities that cannot be weaponized or inflated away. And that's really, gold is the issue here, and it's being overlooked.
The golden rule, Andy, he who has the gold makes the rules, right? Now, you mentioned that 2019 change in the BIS, the Bank of International Settlements, the central bank of central banks, when they made gold a tier 1 asset. Explain the significance of that, because that was one of the first points that I think really started to trigger this process in your mind that this de-dollarization trend is really going to accelerate.
Yeah, well, since World War II, there's been one tier 1 asset by central bank standards, U.S. treasuries and dollars. And in 2017, when we saw the Bundesbank lead the charge to repatriate their gold from the New York Fed, slowly thereafter, the Bank of Austria, Hungary, Turkey, Poland, the Czech National Bank, the Dutch National Bank, they all said, give us our gold back from the Bank of England and the New York Fed, and then quietly went on a buying spree where in 2018, the following year, those same banks bought more gold as a group than they did in the 60 years previously combined. Those numbers have continued to increase ever since, but in 2019, the BIS said, oh, by the way, gold is now tier 1. And that's a huge deal when you put all of this together. And look where we are right now. Countries are continuing to do the same thing. In fact, what we saw, what did we see? The Bank of India, who just bought 1.5 times the amount of gold they bought all of last year, just in the first 4 months of this year. But they repatriated their gold. They brought it back from the Bank of India to the point where much of their gold is, or from the Bank of England rather, much of their gold has been sitting there since 1991. They now hold almost all of their gold. But this is not something that is immune just to India here or centered just on India. We've seen Saudi Arabia and Egypt and 6 African countries just bring all of their gold back from the New York Fed. So not only is gold a tier 1 asset, a riskless asset, if it's a riskless asset, you want to have remove counterparty liability. So these countries who understand that it can replace the dollar or the bond market, rather, the treasury, in terms of its status as a reserve, and being recognized by the BIS, they are also removing counterparty risk by taking it back from the Bank of England, which is the same thing as the London Metals or the London Bullion Market Association, and the COMEX, which is the New York Fed. This repatriation is just as important as the accumulation.
Yeah. And in fact, Andy, according to a study by Invesco last year, a substantial share of central banks were concerned about what we saw with sanctions against Russia. And 68% of respondents said that they were keeping reserves at home compared to 50% in 2020. So in 5 years, according to this Invesco survey of repatriation, that figure is expected to rise to 74% of countries repatriating their gold. We know China has been on a massive gold buying spree, buying at least for the last 18 months, apparently a pause in the last month. We can get into that. Where is Saudi Arabia with its gold purchases?
Saudi, well, again, not everything, a lot of the trading is done in a very opaque manner in what's called the over-the-counter market on the London Metals Exchange. So it's far more private, far less scrutiny, less transparency. They've spent a tremendous amount of money investing in natural resource discoveries, in gold and silver mines. I don't know how much they've been buying. Suffice it to say, by all estimations, they have been buying a lot and using the selling of treasuries and replacing it with gold for the reasons that we just spoke about. And it was Nigeria, South Africa, Ghana, Senegal, Cameroon, Algeria, Egypt, and Saudi Arabia that just brought all their gold back from the New York Fed. So I don't have the official numbers, how much they've been buying, but if it's anything like the rest of the countries in the Southern Hemisphere, a lot. And let's remember one other thing, that Saudi Arabia has been selling their oil for the last year to China for yuan. And what then happens is that yuan is immediately convertible, because maybe China doesn't want to hold the yuan. They can immediately send it back and convert it into gold on the Shanghai Gold Exchange, which is cash and carry. Give me the money, take the product. And we're seeing an extraordinary amount of action coming off the Shanghai Gold Exchange, where these countries are accepting the yuan. For example, all of the, like, for example, you take a look at Iran, who just struck a deal with China to modernize their biggest airport. They're paying for it in oil, but any transactions that are done where yuan is received, they are immediately convertible into gold on the Shanghai Gold Exchange. This is how countries like Iran selling their oil for yuan, or Saudi Arabia doing it, or Russia doing it. These assets that are being sold for yuan can convert into the world's only other tier one asset. My guess, a lot more than we would be led to believe. And the repatriation from the New York Fed, I think, speaks volumes about their desire and their outlook to hold gold themselves and what that actually means.
So let's get back to this petrodollar agreement. Has there been an official statement from the Saudis or from the US? Is this confirmed?
I haven't seen really a ton that confirms in an official statement. I wouldn't expect the United States to say anything, really. I mean, that would just fit like a hand in glove. But in terms, look, I've seen in several Russian news outlets that confirms it, but I have not seen anything from the Saudis. The Saudis seem to kind of be playing both sides of the fence here, so to speak, and I'm sure they have reasons to do that. But I mean, look, the Saudis just turned down an invitation to join the G7 meeting that was just here just a few days ago. In Italy, they turned it down. They didn't want to go there. They are uniting very, very closely, as you can see, with the rest of these countries. And when you take a look at they just joined fully Project Embridge. And people have been following me know I've been talking about Project Embridge for over 2 years. And that is a cross-border digital payment system that was designed by China, Hong Kong, United Arab Emirates, and Thailand. And they are now a full member. I'll read to you. It says, Saudi Arabia has joined a China-dominated central bank digital currency cross-border trial in what could be another step towards less of the world's oil trading being done in U.S. dollars. The move announced by the Bank of International Settlements on Wednesday will see Saudi's central bank become a full participant in Project Embridge. Now, what's interesting about Project Embridge, they did 2 trial trades in 2023. The first was China using digital yuan cross-border with the United Arab Emirates for oil. And the second one was digital yuan cross-border for gold. And in both cases here, I think what you are seeing are the two assets that are being remonetized. As I mentioned, Iran is paying China in oil to modernize their biggest airport. And, when you take a look at what gold represents and the massive amount of gold accumulation by the Southern Hemisphere and the drawdown in all of the world's exchanges and the convertibility of gold off the Shanghai Gold Exchange for yuan, all of these things are coming together where I think it's fitting, it's setting up for a perfect storm where Zoltan Pozsar is right. This is about commodities leading the way, and these countries are in a race to slowly, methodically accumulate commodities without causing too much attention. So am I surprised there hasn't been any official announcement? No, not yet, but their actions are betraying their lack of rhetoric. And I think it will become very obvious at some point. And that's when the de-dollarization and the de-treasurization accentuates. These countries don't want it to happen too quick. As James Rickards talks about the common settlement currency, the reason you don't see it yet is they want greater mass. Well, there was 5 and now 10 and 59 countries. You had mentioned a meeting in Novograd, and what came out of that meeting were several things, but the one thing that I noticed the most that came out of that meeting was 59 countries have expressed interest and said they're going to join the BRICS. And Jim's comment was, look, if you only have 10 countries to trade with in your local currency, that doesn't give you enough shopping options. But if you have 59 countries in order to, or 60 or 100 in order to buy goods and services from, that is when they will issue their common settlement currency, which will then, give them the ability, instead of pigeonholing them into a handful of choices, to what would represent the majority of human population, a larger swath of global GDP, and the majority of the world's shipping lanes and the majority of the world's commodities and all of these things that start to add up when you put all of this together. Yeah, I think it's going to happen. But until then, I truly do believe that gold and oil have been remonetized and are being looked at around the globe as a form of money that lacks counterparty risk. And Project Embridge is just another example. So whether Saudi announces this officially, their actions for the past 2 or 3 years, joining the BRICS, all of the OPEC countries on the Belt Road, joining the Shanghai Cooperation Organization, which is the largest regional financial and military organization on the world, joining the BRICS New Development Bank, their actions are speaking loudly. And to put an exclamation point on it, the Crown Prince saying, I'm not going to come to the G7 meeting, thanks for the invite. Those actions or lack of action speak very, very loudly to me. And I think we'll see more and more of this as time goes on.
And we'll get more into how Project Embridge challenges the SWIFT system, as well as how this BRICS currency, as we said, challenges the dollar. But part of the petrodollar deal, Andy, was that the U.S. was supposed to provide military support and protection to the Kingdom of Saudi Arabia. Now, you mentioned how Mohammed bin Salman snubbed the invitation to attend the G7. We know that tensions between the Biden administration and Saudi Arabia have increased. Since the beginning, when Biden called Mohammed bin Salman a pariah on the world stage, there was also that big signaling with the way the Biden administration pulled out of Afghanistan and the debacle that was, and the agreement that you'll get into between the Saudis and the Russians for protection thereafter. But again, part of the petro deal was that the U.S. gives the Kingdom of Saudi Arabia protection. Does this mean that they don't want a military defense pact with the U.S. anymore? What happens to that? Say what you will, at least for now, the U.S. is still the military superpower. Are the Saudis giving up on that part of the deal? How do you see that?
Well, no, I don't. That's why I think they're playing both sides. But let's just talk about, first of all, the Shanghai Cooperation Organization is the largest regional military organization in the world. The BRICS control, 2 or 3 of the 4 largest nuclear arsenals on the planet. So when you talk about protection, yes, that is what the Saudi deal was originally about, was military protection. And, it's one of these deals where I think that when you add the combined military might of the countries that they appear to be aligning with, it renders what the United States has to offer far less meaningful. Now, they have been talking about this other deal that they're working on, which it depends on a lot of things, what's going on between, the relationship between Israel and Saudi Arabia and all of these other things that we can add into it. But which is kind of the reason I think they're straddling the line here. But what they are asking the United States for is very high-tech weaponry, which they've never given the Saudi kingdom. They are kind of holding out for that. And who even knows if this other deal that they're talking about pans out. I would just simply say that they're aligning with a portion of the world that combined together has a far greater military capability than the West alone does. And that would be covered. But here again, the one thing I admire, Michelle, about the BRICS more than anything is how methodical they are. When you look at Bitcoin and NVIDIA, to me, that's emblematic of the way the people of the United States expect everything to work, just like that. Right now, instant gratification is not quick enough. And, I look back on 34 years of working in this industry to get to where I am now. Nothing comes quick. Nothing. Richard Russell, my mentor, used to say, if you earn 7% per year, you're a rock star. And that takes time and compounding of time and of interest, but time. What the BRICS have been doing for the last 18 years, this is not something that just came out of the ether. It's been 18 years, but now the acceleration is happening. But they do things in a very methodical fashion, and they're not doing it shotgun. They are not trying to be instantly gratified. They are doing it where they get one chance at this. The West has ruled the roost for 500 years collectively. And I think they realize that if they're going to do this, they need to be methodical about it and have all their ducks in a row. So this is something that I think is I admire how they're doing it and building all of the backfilling and building the alliances and doing it with shipping lanes, with commodities, with military, with GDP, with human population. And the connection, when you add the Belt Road into it, you're talking 90% of human population at some point when you put all of these groups together. One of the things I mentioned with you way back when was the Eurasian Economic Union and the Shanghai Cooperation Organization. I said they would join the BRICS, and they're the same countries. Rickards said it last year, and now the president of Belarus is calling for a summit to join these groups together into the BRICS. What you are seeing is a coalition of countries around the world that are uniting under, whatever it be, pushing back against the hegemony, finding safety in numbers, or looking at this as their chance to become industrialized into a new system that they prefer, one that seems to be more cooperative rather than coercive. And when they say it's time and they flip the switch, I think the West will have a hard time to push back against it, because you will be talking the majority of human population, a larger military might, a larger portion of GDP, and the majority of the world's commodities. And that's an important thing, especially for a country that's supposedly going green, because there was just a report that came out of JP Morgan that said China's dominance, real dominance, lies in the mineral processing capabilities, where they've processed 100% of the world's graphite supply in 2022, 90% of the rare earths, and 74% of the cobalt. And the majority comes from the Eurasian continent anyway. But see, these are the kinds of things that they are all gathering, and the countries in which they align with. And if you look at the comments that came out of that meeting in Novigrad, the countries that they want are all going to be related to strategic shipping lanes and natural resources. They're putting it together and doing it the right way, methodically, regimented. And when they say now, it'll be a religious experience, because that's when you would see the dumping, a massive dumping, where the dollar bulls, who have been right, albeit to a lesser and lesser and lesser degree, all of a sudden will realize that it's over. And I hope that doesn't happen, but it appears as though that's exactly what they're doing, and doing it the right way rather than shotgunning it.
Okay, well, a lot to unpack there. And we'll get to that now, Trigger, in a bit. But Andy, yes, granted, China plays the long game, and it's easier to do when you have, one president that doesn't really need to worry about term limits. President Xi effectively, making it so that he can run for life. And I get that you admire aspects of this. But, one could argue that you say that it's more cooperative than coercive. But, one could argue that China doesn't, and many of these BRICS countries don't really represent the same value system of the West, right? A value system which may have shifted, but at least in theory is supposed to be one of freedom of speech, of liberty, of equal rights. And, the fact that China can't play the long game is because, as one example, they don't have these term limits. It's not a real, democracy. So when you say you admire these countries, I mean, I just want you to kind of elaborate on what you really mean there.
Well, where's the freedom of speech in this country? What happened to it? Censorship, cancel culture, and where is look at the Justice Department and the inequality there, and the questioning of a two-tier justice system, and look at how this country has lost its bearings. And this is what I mean about being hypocritical. We go around the world telling people the way to do things, and look at what's happened in our own backyard. We've let 17 million people into the country illegally. Our immigration system is a mess. And our justice system, our electoral system, all being questioned, the wokeness, the lack of free speech. Every single YouTube video that I did in 2020, the host would say to me, Andy, don't say the president's son's name. Don't mention the name of the virus by its name, or I'll get canceled. And I mean, I even have been on shows, a lovely lady named Sarah Westall, where GoDaddy took her domain. So when you talk about free speech and all of these rights that the United States used to be so proud about, look at what's happened to this country and ask yourself, is it the same country? When we talk about democracy, I think the world looks at this country and doesn't look at it the same way. So they're making a tough choice. Do we align here or do we align there? And that's never an easy choice. But I would say to you, and I'm glad you brought that up, because I think the fundamentals, and actually bothers me more than anything, the fundamentals that this country stood for, the nuclear family, the respect of authority, even something as mundane as saying the Pledge of Allegiance, the little things in this country where you respected your teachers and your parents and the police officers. And I left Minnesota because they defunded the police. I mean, literally. I mean, I watched the city where Little House on the Prairie and Mary Tyler Moore was filmed go to hell in a very short period of time. And the lack of things that this country stood for and stands for have bothered me more than anything. But if you think that that's lost on the rest of the world, I got a bridge to sell you. The rest of the world sees this country and says, what the hell is happening in the United States? And I think that is part of the reason you're seeing more countries have an easier time making the choice. Do we take cooperative industrialization, regardless of the fact that we don't align maybe with the BRICS, but do we even align with the United States anymore? Is what they are peddling real or not? And I'll leave that up to people to decide, but I will tell you, it disheartens me as a father of 3 kids more than anything to think of the world my kids are growing up in, and the things that I've seen in the last 3 years that I can't even believe I've seen in terms of what's happened to this country on a social level, on a moral level, let alone economics, but mostly spiritually, socially, and morally. It ain't the same place that I remember.
Right. So, if what's backing the dollar is the full faith of the U.S. government, and that's coming into question
Let's not forget credit. Let's not forget the full faith and credit. So, I mean,
right.
yeah.
And that $35 trillion of debt, right, Andy? $35 trillion of debt and growing. Full faith and credit of the U.S. government, which, we've said is waning on the world stage and also domestically. And despite that, we had this whole, bringing it back to the petrodollar, we had this whole petrodollar deal to some degree propping this up. Now, you say this is a very big deal. But, you could say we've already seen oil sold in other currencies, right? The expiration of this agreement, is it that fundamental if, according to JP Morgan Chase, around 20% of global oil in 2023 was bought and sold in non-US dollar terms? So short of the Saudis saying we do not accept dollars anymore, which they haven't said, and I don't think they're likely to say, just to push back here, is this really such a game changer that this petrodollar agreement has expired if the trend had already begun?
Yeah, it is. It's just that it's accelerating. And again, this is what I mean, is that they do things methodically. It's one of these things that once you cross that line, the immediacy of the reaction would be profound. So I think it's more along the lines of doing things slowly and methodically and doing it the right way. It is a big deal. You know, it used to be 100%. Okay, now it's 80%. And even a bigger deal to me is the lack of using the treasury market. The realization that holding treasuries is not only risky in a government that, you know, ultimately has chosen inflation over austerity, where rates ultimately have to rise, even if the budget was the budget was balanced. You mentioned a 34, almost $35 trillion debt, and remember, trillion seconds ago was 31,688 years ago. We will inflate, and rates will go higher, because how the hell do you pay? I don't know. $99 trillion shortfall in Medicare Part B, $22 trillion shortfall in Medicare Part D, the prescriptions, $77 trillion shortfall in Social Security, government and military pensions, the expansion of all of the welfare state. You know, people should check out the Cloward-Piven theory. It'll blow your damn mind. Cloward-Piven theory. I don't know if you've talked about it, but this is a very, very, very scary similarity, let's just simply say. And if we have time to talk about it, we can. But all of these unfunded liabilities that amount to nearly 200 trillion, who's going to pay for those? Who? And who in their right mind is going to buy a long-term, a long-dated duration treasury in a country that is in essence broke, who has chosen inflation over austerity, and the rest of the world is selling treasuries in order to buy commodities? So when you talk about, you know, this being, you know, could this be not a big deal? Yeah, it's all part of the same thing. And I think really what we are seeing is more along the lines of, you know, how do we continue to look? The Congressional Budget Office, Michelle, which is the last nonpartisan group in Washington, said by 2031, 100% of tax revenue goes to pay just the interest on this debt. We're accumulating $1 trillion of debt every 100 days just to pay the interest and mandatory entitlement like Social Security. But ask yourself this: how does the West maintain its supremacy, even militarily, when military spending is discretional? So we have to borrow money to fund a military to go around the world coercing people. Ain't going to happen. And that doesn't take into account the 17 million people who have entered this country illegally. Who's going to pay for their food, their housing, their clothing, their medical? And, you know, God forbid that 1 or 2% of them have bad intentions to this country. Every 1% is 170,000 people. 5% is way bigger than any standing military. You could argue everything is different now in this country. And it starts with what amounts to, even if the majority of these people are seeking a better life, if 5% aren't, you're talking almost 1 million people that want to disrupt this country. So when you talk about buying gold and silver, or looking at the reasons to do these things, it's not to become wealthy, it's because it is wealth. Gold and silver are wealth, and the biggest money in the world is proving that by their acquisition and their repatriation. The lack of trust is profound. And the bigger question is, how do we ever get that trust back? And hopefully the new administration, if there is, God willing, a new administration, without being political, can pull us out of this nosedive. But short of that, I think we're in big trouble. And that's why I tell people to own gold. It's not to get rich. It's because it's something that's outlived everything the world's ever thrown at it. And the big money around the world seems to echo that with their acquisition and repatriation.
Well, we'll get into a new administration and if that can perhaps reverse some of this damage. But I want to focus a little bit more again on this agreement, because it's gotten very little coverage in the mainstream. And an argument that's being put out there is because it's not really such a big deal, because it wasn't really an agreement in the first place. There was a big article in MarketWatch quoting various economists saying that this is fake news. And they bring up Paul Donovan, who's the chief economist of fake news, and the fact that this is a big deal, that there was this real agreement. Paul Donovan, chief economist at UBS Global Wealth Management, he said that, there wasn't really a proper agreement, and they did accept other currencies after the agreement, at least for a year afterwards, like the British pound. And it was just an agreement on joint economic cooperation. And it was the Saudi Arabian Joint Commission on Economic Cooperation. It was formally established, they do say that, by Henry Kissinger, as we've just discussed, but that it wasn't this like it only will deal with dollars exclusively. and that it was intended to last only 5 years, and then it was repeatedly extended, but not even that officially repeatedly extended, and that there was perhaps this secret agreement between the US and Saudi Arabia in 1974, which promised military aid and equipment in exchange for the kingdom investing billions of dollars of its oil sale proceeds in the US. But they say that, there wasn't this official must be sold exclusively in dollars petrodollar agreement. And therefore, it's not a big deal. And those talking about it, they're not in the mainstream media, are fake news and conspiracy theorists and trying to create unnecessary panic. What say you to that?
Can I say horseshit? Because that's a bunch of horseshit. As far as I'm concerned, I'm sorry if you have to bleep that out. But that article, I read it, and it talked again about the real value is the U.S. Treasury and where are people going to put their money. Look at what these countries are doing. Selling treasuries and buying gold, replacing it. It's outperformed the bond market over 25 years by 100%. It's doubled its performance of the bond market with no counterparty risk. And these, what else are Wall Street analysts going to say? This is their life. God forbid, we actually think outside the box. And these analysts are wrong. This is a massive deal. It is a huge deal. You can't get out of the way of what you don't see coming. And some of these analysts, they've learned more and more about less and less till they know everything about nothing. And they don't look at the world with an open mind. And I mean, you don't even have to look in that much further than to that meeting that we just saw in Novograd, where 21,000 people attended from 139 nations. $80 billion in bilateral deals were signed on the sidelines. 59 countries have said they plan to join BRICS. So yes, it is a big deal, regardless of what they are telling you about the petrodollar deal being a nothing burger. It is not a nothing burger. When you see Saudi Arabia decline an invitation from the G7 to come to admit themselves and immerse themselves in all of these organizations, including Project Embridge, which is a system that allows for trading outside the dollar and the SWIFT system, you are setting yourself, we are setting ourselves up for a big letdown if we believe that this is non-consequential. And what else are they going to say? See, this is where everyone is focusing. They are focusing on the bond market, but gold is better than the bond market. Gold has no counterparty risk and has outperformed the bond market for 25 years handily. So the way that these countries look at it is like, why would we ever want to hold those assets, which are losing ground to inflation? It's a country that does not align ideologically with us, and they are going to weaponize their treasury against us and steal it, and maybe even give it to the country we're fighting a war against. You've crossed that line. You don't come back. And these people who cling to this recency bias, these normalcy bias, the old saying, you have to roll with the changes. They're going to be rolled by the changes because they can't see past, I think, what is a massive tectonic shift. It's just not bang in your face like that. It's happening if you do the work and dig. You can see it if you actually have eyes open enough to believe it.
Andy, again, just to play devil's advocate,
please.
Not saying I disagree, but we had the chief global investment strategist at Charles Schwab, Jeffrey Kleintop, saying that the end of the petrodollar agreement between the US and Saudi Arabia is pretty meaningless for at least three big reasons, and I want to hear you counter these. The global oil financing, insurance, and transport system remains almost entirely dollar-based. One, while oil could be increasingly bartered or sold in other currencies, Chinese yuan, Indian rupee, etc., once the proceeds are received by Saudi, they are likely to be invested in dollar-denominated assets, treasuries, rather than yuan or rupee-denominated ones. And there is about 10 times as much oil traded in futures than physically delivered, and the futures are denominated by dollars, dominated and denominated by dollars.
Easy. First of all, you have the Shanghai, you have all of these exchanges that I think are realizing around the world that the COMEX and the LBMA are fugazi. And you take a look at the amount of leverage that's being traded in all of these markets where, and I'm going to answer your question, but as an example, on the LBMA, they've admitted, or the London Bullion Market Association, they've admitted that their contracts are 10 times what they report. They're trading 20 million ounces of gold a day. Well, that would mean 200 million. They're trading 290 million ounces of silver. That would mean almost 3 billion ounces of silver per day, and it's all synthetic. And this is where the tail wags the dog. Well, the same thing is true about oil. How the hell do you get oil to negative 40 a barrel in any real world? Well, you do it on a futures exchange which distorts the price. And if you take a look at, for example, the BRICS grain exchange, where they came out and said all of these commodities, and including what they've said about the Shanghai Gold Exchange, where the head of the Shanghai Gold Exchange 15 years ago said, we produce and consume these commodities, yet they're priced in the West. And once we have the right to speak at the table, the real price of gold will be observed. Same thing they said about the BRICS grain exchange, that the COMEX prices all of these commodities, and we produce more grain than they do. So at some point, we are going to reprice based upon demand, and the same thing will be true about oil. That's the third question. The second question, well, we've already said they're not going to go back into treasuries. They will choose commodities, which are replacing. In my mind, gold already has, and oil already has replaced the treasury as a preferred form of recycling these excess reserves into money that cannot be taken away. And what was the first question? I'm so sorry. Will you repeat the first question again?
Let me, yes. So again, he was saying that oil could be increasingly bought in other currencies. We touched on that. He was saying that the financing, insurance, transport system is dollar-based. And again, that the futures markets are dollar-denominated and dollar-dominated.
Yeah, well, the futures markets
infrastructure from futures to transport system, financing, and insurance, dollar-based.
Right. Well, the futures market, I believe, ultimately will go by the way of the dodo bird, because it's a system based upon all of this leverage. Where when the futures markets were created, is a way to offset risk, and it wasn't a way to outright speculate. It was to offset risk in commodity holders or farmers or whatever, producers. And I think what you will see is a transition from the Western-dominated markets, the LBMA and the COMEX. Look, who just bought the London Metals Exchange? Oh, yeah, it's the Chinese. That's right. They bought it. That's the base metals, like copper, zinc. They understand what's going on. They're playing the long game. And what did Putin just say about the countries that will come into the BRICS fold? They want it to be those that are in particular dealing with shipping lanes. And look at the Belt Road, and look at the North-South corridor, and all of these things in both the BRICS and the Belt Road that are connecting. They understand the significance of shipping lanes and of having ways to move product that sidesteps the U.S. Navy and sidesteps the United States interference. So whether it be about futures markets that are fugazi, that will move to those countries that produce and accumulate and utilize all of the commodities, the prices will be set over there. Whether it talks about all of the excess going into treasuries, and that's the main argument, that is a dying argument. And I think Zoltan Pozsar was right. This is Bretton Woods 3. Give me the gold. I don't want your promises of treasuries that can be rehypothecated, that can be watered down, that rates can go up, we can default, we can inflate, we can confiscate. Fugazi, that's moving out. And every single argument that these people throw out, I don't care what their title is, how prestigious it is to be the head commodity guy at Schwab or wherever you said. I don't care. None of them are looking at things through any other lens than what they have achieved success in. And I don't think that they're looking at things the right way. They're going to get run over by this with that type of mentality. And you can see that's exactly what the BRICS and the Chinese and the Saudi, all these countries, that's what they're counting on. Because of that, you don't see people rushing to crowd them out of their trade into gaining entrance into all of the commodities and buying all the gold and standing for delivery. This is all being done by the other countries around the world who are using this ignorance and this dollar-based recency bias against us, including using the suppression of the futures markets, where we can create distortions and illusions in world commodities like that by rehypothecating, and commercial banks throwing billions and billions and billions of dollars, and hedge funds doing the same thing to distort real value prices of commodities. And that will be used against us. And it is being used against us right now. Just like we saw recently, 500 million ounces or $500 million worth of gold delivered to BRICS Hong Kong, where in 2015, COMEX put up a a new contract where you can deliver COMEX contracts to Hong Kong, to BRICS, which is a COMEX facility, through what's called exchange for physical. Those bars get trucked over to the Shanghai Gold Exchange and sent out to the world. This is happening, and it is being ignored by the mainstream completely and totally. And the worst thing that you can do is listen to these people who have no idea what's happening around the globe, and you'll be far better off than listening to you, Michelle, and all the guests you have on your show, not just me, but all of them, who are saying things that are more illuminating and more real than these so-called experts who are talking about things that I think perhaps are really changing from the way they used to be.
So I appreciate the endorsement there, Andy. And I know we're getting into the weeds here, and we will continue to explore further. But,
it's okay.
Big picture, since it's happened, and again, we've just explained why. I mean, the dollar has gone up. According to the Dixie, it's up, 0.7% in the last 5 days or so, up over 1% in the last month, up 4.1% year to date. Dollar only getting stronger again. This is according to how it's measured against a basket of other currencies, 6 other currencies, which arguably should be updated because it hasn't been updated for a while in terms of the currencies in that basket. But the bigger picture, Andy, is, the argument has always been, yes, but the dollar is still the best of a bad bunch, cleanest shirt in the dirty laundry basket, can't be replaced. What will replace the dollar? And then we go to this, potential commodity-backed BRICS currency, right? That's the answer to what will replace the dollar. So give us a sense of where we are with that. What's the progress on that? Where are the BRICS with officially coming up or putting together this plan?
I mean, I don't know where exactly they are. We know they're working on it. The finance ministers have told us that. And I think Jim is right when it will be all about a mass adoption by enough countries whereby they have 59 or 60 or 100 countries to go shopping in for goods and services, not just the 10 that we see. But more relevant, what about the West's response? When I first met you and we did that interview, you asked me what could change this. And I said, well, there was just a report that came out by the IMF saying it was called gold, a barbarous relic, or gold, an international reserve currency, a barbarous relic no more. You had Kristalina Georgieva, the head of the IMF, come out and say if a CBDC not pegged to something would just be fiat. What is the only other tier 1 asset? Gold. I think that there's a very high probability that you also see the West or the IMF issue some form of a digital currency also pegged to gold using distributed ledger technology and gold showing the veracity and the immutability on the ledger and backing it. So I don't know where they are, but we are moving in that direction. There's no question about it. We keep getting updates from the finance ministers that indeed this is what they are working on, and they want everyone to come back to the meeting here in August in Russia and report their findings. But I think indeed when you see these are the countries that have been massively accumulating it for a long time and repatriating it, that it is on the docket. It is how you inspire confidence, but not until it's time. So what have they been doing in the meantime? Trading in local currencies and buying gold and oil instead of U.S. treasuries. They're not going to tell us exactly when they're going to release it until they release it. But I think any system, whether it be from the West or from the rest of the world that wants to have credibility, has to be something where immutability and veracity come together. That's gold and blockchain technology. It doesn't have to be redeemable because de Gaulle from France proved that convertible currencies convert. But if you show the immutability on a blockchain, you have it audited by independent auditors where there is indeed the inspiring of confidence and veracity, you have a shot. And whether it come from the West or the BRICS first, I don't know. But I will tell you in my heart and in my soul, I know that there will never be another completely fiat-based system trust ever again. You can only pee in the punch bowl so many times before people stop drinking the punch. And I think now you have to just start all over. And that starting all over comes with trust, and trust and immutability would be things like commodities and blockchain. So don't know where it is, but I know they're working on it. And I think Jim is right. It will be something that they will issue once they have enough countries that represent a large enough swath of human population in order to issue it safely and know that it will work the first time out.
So, Andy, you're saying regardless, the era of fiat currency is done. And again, fiat means by decree, Latin for by decree, and essentially currencies, backed by nothing. What is the timeline? And I always ask you this, and it seems to accelerate every time we speak. But you see, what is the ultimate fate of the dollar that you're seeing here, and under what timeline? Play that out for us.
On the Spot with Michelle Makori is brought to you by Swan Bitcoin. Swan Bitcoin IRA. Your legacy, your way. Real Bitcoin, not proxies. Traditional and Roth IRAs. Fast, easy setup. Start now at swan.com/retire.